All right, today we're breaking down a really smart move from 1606 Corp. See, they're not betting on the next flashy AI algorithm. Nope, they're betting on the one thing that all of those algorithms absolutely need to survive: power. We're going to look at how this one strategic acquisition is set up to solve a massive piece of the AI infrastructure puzzle.
So here's how we're going to tackle this. We'll start with the investment thesis itself. Then we'll dive into the market and the power crisis, look at the specific asset they're acquiring, break down their plan for execution, and finally, talk about the upside. We're talking cash flow and a potential uplisting.
Okay, first up, the investment thesis. Let's get right to the why behind this whole thing. What's the big idea here?
And here it is, plain and simple. This move is all about two things: locking in long-term cash flow and getting the company onto a bigger stock exchange. And how are they going to do it? By solving one of the biggest headaches in AI right now: its desperate need for power. This is about hitting key investor goals from day one.
All right, let's talk about the market. You can have the best plan in the world, but you need a problem to solve. And boy, is there a big one: a full-blown power crisis.
I mean, just look at these numbers. The electricity demand from data centers is literally exploding. We're talking more than doubling in just 5 years. That's not just growth. That's a tidal wave of demand that our current power grid it can't handle it. This creates a huge supply gap.
So, what's the size of the prize for solving this? It's massive. The market for what's called captive power generation, basically companies building their own power plants, is set to be worth over $300 billion. Let that sink in. This is not a niche play. This is a foundational part of the future economy.
But get this, it gets even better. If you drill down specifically into power for data centers, the growth rate is more than double the overall market. We're talking 13.2% compound annual growth. When you see a number like that, you know one thing for sure: that is where the puck is going. So how do you actually solve this grid congestion problem? Well, it's something called behind-the-meter captive power. Think about it this way: the public grid is a traffic-jammed highway. Behind the meter is like building your own private direct access road right to your facility. You generate your own power on-site, completely bypassing the grid. For a data center, this is everything. It means energy security, cost control. It means the lights always stay on. Okay, so we've established the why and the massive market. Now let's get to the what. What is the actual asset that 1606 Corp is acquiring? This right here. This is the heart of the deal. It's a 55-megawatt power generation facility in Texas, and it's the absolute cornerstone of their plan. And this is the really smart part. It's not just a power plant. It's the whole shebang. You've got the 55-megawatt plant, a 50,000 square foot building that's already climate controlled and ready for data centers, 132 acres of land, and the most important part: all the equipment, permits, and infrastructure are included. It's basically a plug-and-play operation. So let's look at the deal structure because it's pretty savvy. The total price comes in at just under $12 million. But they're not just writing a check. It's a mix of $7.5 million in cash at closing, and then they're assuming about $4.2 million in existing debt. It's a really balanced and intelligent way to get a major asset on the books. Okay, so you've got the asset, but an asset is just a thing, right? The real question is execution. How do you make sure this thing actually runs well and makes money? That's where the plan comes in. And a key part of that plan is not trying to do it all themselves. They're partnering with Cbdw Inc. This is a huge move because it shows they know what they don't know. They're bringing in proven experts to run the show. And these guys, Cbdw, are the real deal. They're led by Dr. Karthik Raghavan, and they have an incredible international track record. We're talking high-efficiency power plants built and operated in India, Europe, South Korea, the Middle East, and right here in the US. Bringing in a team like this, that's how you de-risk an operation and hit the ground running. The roadmap from here is super clear. Step 1, finalize the agreements. Step 2, satisfy all the usual closing conditions. Step 3, close the deal. They're targeting March 11th, 2026. And then Step 4, go after that higher-tier exchange listing. It's a very logical, step-by-step process.
So, we've seen the market, the asset, the plan. Let's get to the good part, the upside. What does all this mean for value creation?
Well, you don't have to guess. The CEO, Austin Lambrecht, put it perfectly. He said, this is all about strengthening their long-term cash flow potential and positioning the company to get listed on a bigger exchange. It's crystal clear. And you gotta understand, this isn't a one-and-done deal.
This asset is the foundation. It's the first piece of a much bigger, scalable platform. The endgame here is to own the critical power infrastructure that the hyperscalers, the biggest names in tech and AI, will desperately need. This plant makes them a serious player, instantly.
So let's just boil it all down. What are the key takeaways here? First, you're solving a critical bottleneck in the hottest market on the planet, AI. Second, you have a hard asset that's a direct path to cash flow. Third, your execution plan is de-risked by bringing in world-class experts. And finally, the goal is clear, a potential uplisting to a major exchange.
Which really leaves us with one final thought. In this AI-driven future we're all racing towards, you have to ask yourself, who's holding the truly valuable asset? Is it the person with the fancy algorithm? Or is it the person who controls the power switch?